Most people spend their entire lives trading time for money. They wake up early, battle traffic, work 8 or more hours a day, come home exhausted, and do it all over again the next day. The problem with this model? It has a limit. Your time is finite. And if your only source of income depends on your physical presence and active effort, you'll never achieve financial freedom. True wealth doesn't come from what you do during business hours. It comes from what your money does while you sleep. Think about the world's most successful investors. They don't work more hours than you. In fact, many work less. The secret lies in making money work for you. This means investing in assets that generate consistent returns, whether it's dividend-paying stocks, rental properties, or businesses that run without your direct involvement. If your money is sitting idle today, it's losing value. Inflation is eroding your purchasing power, and every minute you're not investing is a wasted opportunity. The good news is you don't need millions to get started. You can begin by investing small amounts in index funds like the S&P 500, which has historically grown over time. You can build an online business that generates sales while you sleep, create a digital course, or even start a YouTube channel that earns passive income. The key is to take that first step, because once you understand this principle, you'll never have to rely solely on a paycheck again. If you're tired of living paycheck to paycheck, drowning in debt, and never having enough money to truly enjoy life, it's time to learn about the 136 method. With it, you'll ensure you always have money to pay your bills, invest in your future, and live with greater freedom. While most people remain trapped in an endless cycle of bills and stress, those who apply this method break free and finally take control of their finances. The link is in the description or the first pinned comment. Let's talk about patience. One of the biggest mistakes I see people make when trying to build wealth is rushing. They jump into the stock market expecting to double their money in a few months. Start businesses hoping to make millions in the first week, or invest in anything promising quick returns. But what happens? They lose everything. Money has a simple rule. It rewards those who know how to wait and punishes those who act impulsively. If you lack patience, you'll always be transferring your wealth to those who have it. I built my fortune by investing in solid companies and letting time work its magic. I never bought stocks expecting quick gains. I bought good companies and held them for decades. While impatient investors sold at the first sign of dip, I watched my wealth grow over time. The problem is, most people don't understand the power of compound interest. Here's an example. If you invest $1 a month in a fund that yields 10% annually in 30 years, you'll have over $200,000 without lifting a finger. Patience isn't just about money. It's a mindset. To build wealth, you need to stop chasing instant gratification. While most people spend money on things that bring immediate pleasure, the wealthy invest in assets that take time to yield returns but multiply their gains over the long term. Ask yourself, am I building wealth or just transferring my money to those who know how to wait? When it comes to financial security, relying on a single source of income is dangerous. What happens if the company you work for shuts down, you get laid off, or a crisis hits? Depending on just one income stream is like walking a tightrope without a safety net. The wealthiest people in the world don't rely on a single source of income. They create multiple streams to ensure that if one fails, others continue to grow. Think about the biggest fortunes. I didn't become a billionaire just by investing in stocks. I built businesses, invested in companies, diversified my portfolio, and made sure my money was always working for me in different ways. If you want financial security, you need to adopt this strategy. Start by investing a portion of your salary, creating a side hustle based on something you enjoy, or buying assets that generate income without requiring your time. And don't think this is only for people who already have a lot of money. If you earn $2,000 a month, you can start by investing $100. You can learn a valuable skill and offer services online. Start a blog, a YouTube channel, or invest in a small business. The key is to understand that relying on a single income stream puts you at risk. The more streams you create, the more protected you'll be against unexpected events. When it comes to growth, if you want to earn more, don't just focus on increasing your income. Invest in your greatest asset, yourself. The knowledge you gain today can multiply your money in the future. But most people do the opposite. They spend everything they earn and don't dedicate time to learning. The difference between those who prosper and those who stay stuck isn't how much they earn. It's what they know. People with more knowledge make better decisions, spot opportunities others miss, and grow financially. I've always invested time and money in learning. I read daily, study markets, observe patterns, and refine my thinking. Here's an example. If you spend 30 minutes a day reading about investing, business, and economics, in a year, you'll know more than 99% of people. Books like The Intelligent Investor by Benjamin Graham or Rich Dad, Poor Dad by Robert Kiyosaki can completely change your perspective on money. What you learn today could be worth millions in the future. And investing in yourself isn't just about theoretical knowledge. Developing practical skills like negotiation, communication, and understanding human behavior also makes a huge difference. Money always flows to those who know what they're doing. So ask yourself, am I truly becoming a better version of myself, or am I stuck in time? Because the biggest financial risk isn't investing. It's not knowing what you're doing. Many people say investing is risky, but the real risk comes from ignorance. Have you ever heard someone say they lost everything in the stock market? Usually, they invested without understanding, followed random tips, or let emotions drive their decisions. The problem wasn't the investment. It was the lack of knowledge. When you know exactly where you're putting your money, the risks drop significantly. I never invest in something I don't fully understand. If a company seems promising, I study its business model, analyze its history, and assess its long-term potential. If you want to invest, follow the same logic. Before putting a single cent into anything, ask yourself, do I truly understand how this works? If the answer is no, study it first. A great starting point is books like The Warren Buffett Way, which show how to analyze opportunities intelligently. The risk isn't in investing. It's in investing unprepared. Those who understand the market make strategic decisions. Those who don't gamble blindly and lose money. The choice is yours. Become a conscious investor or stay trapped in fear of the unknown. If you want to invest like a professional, think like a business owner, not a speculator. Most people buy stocks like they're playing a lottery. They look at charts, follow tips from experts online, and buy without understanding what they're getting into. That's the fastest way to lose money. I only buy stocks in companies I'd want to own entirely. Before investing, I ask, if I had billions, would I buy this entire company and hold it for decades? If the answer is yes, it's a good investment. Don't invest in a stock just because it's rising. Invest because the company has a strong business model, consistent profits, and lasting competitive advantages. For example, Coca-Cola isn't just a soda company. It's a global brand with a proven track record of growth. Companies like these are the ones that generate wealth over the long term. If you want to invest like a billionaire, think like an owner, not a speculator. When you buy stocks with this mindset, you don't panic during market dips because you know you own a piece of a great business. You don't sell impulsively because you see the real value of the company. True investors think long-term, while amateurs try to get rich overnight. Now, if you want to keep your money growing, you need to avoid one of the biggest wealth killers: unnecessary debt. Debt can be a powerful tool or an anchor that drags you down. The problem is, most people use credit in the worst way possible. They buy cars they can't afford, finance unnecessary purchases, and max out their credit cards. This kind of debt keeps you trapped, working just to pay interest and survive. The wealthy, on the other hand, use credit strategically, only to generate more money. If you want to build wealth, you need to differentiate between good debt and bad debt. Bad debt takes money out of your pocket. Things like car loans, unnecessary installment purchases, or consumer loans. Good debt helps you earn more, like a mortgage for a rental property or a loan to expand a profitable business. Before taking on debt, ask yourself, will this help me grow financially, or is it just giving me a false sense of comfort? If it's the latter, avoid it. The money you spend on interest could be invested in growing your wealth. If you learn to use credit wisely, you'll avoid financial traps and be ready to seize the best opportunities when they arise. Speaking of opportunities, the financial market is a psychological game. When everyone is optimistic buying stocks and saying the economy is booming, that's the time to be cautious. But when panic sets in, when the news talks about crisis, and people are selling in desperation, that's when the best opportunities emerge. I've always followed this rule: buy when everyone is fearful and sell when everyone is greedy. History proves this time and again. During the 2008 financial crisis, solid companies were sold for pennies because panic took over. Those who stayed calm and bought shares in great companies multiplied their wealth years later. The same happened during the 2020 pandemic. While most were selling in panic, savvy investors bought stocks at rock-bottom prices. Time passed, the market recovered, and those who waited reaped the rewards. The key to successful investing is controlling your emotions and acting rationally. If you follow the crowd, you'll end up like the majority, and the majority never gets rich. You need to see beyond the panic and euphoria of the moment. When everyone is buying like there's no tomorrow, pause and reflect. When everyone is fleeing the market, analyze where the opportunities lie. And remember, it's not enough to make good investments. You need the discipline to keep your money growing. Earning money is just the first step. Preserving and multiplying it is what truly matters. Many have earned fortunes only to lose them because they lack financial discipline. You could have a high salary, inherit money, or even win the lottery. But if you don't know how to manage it, it will disappear faster than you think. Wealth isn't just about what you earn. It's about what you keep and grow over time. The problem is, most people increase their spending as their income rises. If they earn $5,000, they spend $5,000. If they start earning $20,000, they spend $20,000 or more. This vicious cycle prevents any real accumulation of wealth. Instead of spending every extra dollar, the wealthy do the opposite. They invest first and live on what's left. The secret isn't about cutting out all enjoyment from life. It's about ensuring part of your money is always working for you. If you want to truly prosper, start by creating simple rules. Set aside a fixed percentage of your income for investments before spending on anything else. Learn to differentiate between wants and needs. And above all, adopt a long-term mindset, because knowledge and discipline are the true engines of wealth. And those who understand this never stop learning. The greatest investment you can make isn't in stocks, real estate, or businesses. It's in knowledge. Money can be lost, businesses can fail, markets can crash, but what you know can never be taken from you. The difference between a successful investor and someone who loses money isn't luck. It's the level of knowledge each has. The more you learn, the better your decisions, and the greater your ability to build wealth consistently. I dedicate a significant part of my day to reading, studying markets, tracking trends, and learning from others' mistakes. If you're not learning something new every day, you're falling behind. A great starting point? Read The Intelligent Investor by Benjamin Graham and Common Stocks and Uncommon Profits by Philip Fisher. These are essential reads for anyone who wants to understand how to multiply money intelligently. Financial knowledge isn't a luxury, it's a necessity. The world is constantly changing. New technologies emerge, new ways to invest appear, and those who don't keep up get left behind. If you want to be successful, you need to keep evolving. The question you should ask yourself is, am I acquiring knowledge every day, or am I just waiting for luck to change my life? Because those who learn and apply that knowledge are the ones who truly multiply their wealth. Now that you've learned these lessons, the question is, will you apply them or stay in the same place? Wealth doesn't come from luck. It comes from the decisions you make every day. Start small, invest wisely, and build a future where money works for you. Comment below on which of these lessons impacted you the most. And if you want to keep learning about how to multiply your money, subscribe to the channel and turn on notifications.